Let's start with a really simple but powerful idea. To understand a huge mistake that so many people make in the financial markets, we actually need to talk about cricket for a second. Yeah, cricket. Specifically, what happens when you're completely outmatched and you don't even know it.
Just picture it. You're standing there, and Jasprit Bumrah is about to bowl a 150-kilometer-per-hour scorcher. And what's in your hands? A plastic toy bat. It's not just a mismatch, right? It's a complete disaster waiting to happen. Well, what if I told you that this exact same scenario plays out every single day? Not on a cricket pitch, but in the stock market.
And there it is. The cricket pitch is the derivatives market, and that plastic bat, well, that's the set of tools most retail traders are bringing to the fight. Every single day, thousands of people are stepping up to the plate, totally unprepared for the professional-level game they've just walked into. So let's call this exactly what it is: the plastic bat problem. It's this whole issue of being fundamentally under-equipped, totally outmatched. Basically, you're set up to lose the game before you've even made your first move. Because here's who's on the other side of the field. You're not just up against other individual traders. You're facing massive institutions, the real pros. These guys have the best tech, mountains of data, and entire teams of experts who live and breathe this stuff. They've absolutely mastered the game. It's David versus Goliath, but David showed up without his slingshot. So what's the real-world result of this epic mismatch? Well, the numbers are pretty staggering, and they point to a huge misunderstanding about why so many people fail at this. 94%. According to the source material, that's the percentage of retail traders who lose money. Just let that sink in. For every 10 people who give it a shot, more than 9 of them fail. But the most important question isn't that they fail, it's why they fail. And here is the absolute key insight. This failure has nothing to do with how smart you are. You could be a genius and still lose your shirt in the market. The problem isn't intelligence, it's a lack of training. It's about being trained to see the real game that's being played, not just the simple version you see on your screen. This really shows the two different mindsets perfectly. The plastic bat approach, over on the left, is all reactive. You're just chasing prices after they've already moved. But the professional approach, on the right, that's proactive. It's about looking at the market structure to figure out why a price is likely to move, before it ever does. Okay, so how do you actually make that jump from being reactive to proactive? Well, it all starts with learning to look past the price chart itself, and starting to see the invisible forces that are actually pushing the market around. This is the core idea. Just watching price candles go up and down is like watching the scoreboard of a game without ever seeing the players on the field.
Good evening, everyone. Good evening, all. A quick sound check. I hope I am coming across. Great. So let's start this 5 p.m. session and prepare for what we can expect for the settlement tomorrow. So, but before that, let's do a quick review of what we have done last week, and then we'll have a review of what we have done today. So we have the weekly report, which we publish based on spot. And this was also published last week. And last week in Nifty spot, we formed a neutral extreme profile to the downside. And you can see how in the week prior to it, also, we had formed a neutral extreme profile. So this was the third week. It was a hat trick of neutral extreme profiles to the downside in Nifty spot. And what we saw was a quick look at what we did last week. We repaired these poor lows. We discussed about this in the 5 p.m. session last Monday, where we spoke about what we had done on Monday. And we saw this small K period selling tail. This high was 25803. We made an attempt to make new highs, but we were left with an responsive selling tail and we could not get back into this weekly value. So what we saw the next day, the seller came back with this initiative activity and we went on to break below this buying tail. So this 25803 was a failed auction on the weekly time frame, because this new highs after uh, the J period on the Monday was rejected the next day, and we broke below these lows with an extension handle and closed around the lows. This was again followed by initiative selling. The next day it was confirming that this was after the break we had on 5th. This was confirming that the sellers were still in control and they continued to march lower. And finally we opened with this big gap down on Friday, where we made a low of 25318. We hit this extension handle, and on the daily time frame we had a VPOC, unvisited POC at 25329. So that was hit, and there we finally left a period buying tail. So you can see how this was telling us that the downside which was there in the week was stalling, and this was also the 180R objective of this weekly FA. So 25330 was also an extension handle. You can see this. So this was the previous demand zone, and that is where we stalled in the gap down. And once we hit that important objective, we went on to probe higher. We saw this big range extension to the upside, multiple range extensions in fact, and we tagged this POC. So it was still a neutral extreme profile, and we formed completely lower value. Neutral extreme profiles are not known to give follow-ups. So what we were looking was for this value area as a to start with. 25536 was the reference. We closed at 25492, which was our first hypo on the upside for the day. And what we did today was we never went below this POC of Friday, and we never went below this. So we remained above the first hypo. We took off this 25547. We also took off this 25585, and then we tagged this reference of 25645. 25645 is an important reference. We have also marked that on the weekly chart. This red line is that level. Why is it important? Because we had a failed auction, and the failed auction is at 25803. Why the failed auction came into play was because it broke below this weekly IBL. This was the lows of last Monday where we had the initiative buying tail. So when we broke that, that became a supply point now. And you can see how today also we were not able to successfully negotiate this level. And this level was marked and given in yesterday's published report. And today, in fact, you can see how we stalled right there. So that is why it is very important to know structure wise what are the levels which you need to hold. And this continues to be an important reference. So let's have a quick look at what we have done today. What we'll do, we'll only cover Nifty today because we have the settlement tomorrow. So let's focus more on Nifty, and we'll have the spot as well as futures discussed along with the tools which we need to look out for tomorrow's settlement. So this is the spot weekly chart on screen of Nifty, and you can see what we saw in the morning was an open below previous value but got rejected. We got back into this weekly value, and we have remained in this, forming a kind of P-shaped profile. And you can see how we formed multiple highs at that 25645. We are not able to close above it convincingly. So this is still showing a supply and this will be an important level to watch out for tomorrow. If we are able to take this out, then we are looking for a tag of this previous week's VPOC of 25754. So you can see how the structure in the market profile chart is giving us two levels, and we'll see the same levels being reconfirmed with the tools which we have for tomorrow. So today's profile is a P-shaped profile and a nice balanced profile, and which is why we will have to look out for a move away from this balance if we need to get a directional move for the settlement. If not, we can continue to form a balance around this zone. We will come to what are the lower levels and the upper level when we come to the tools for tomorrow, and then we will figure out what we need to watch out for. So on the upside, 25645, and if we are able to sustain that and get some buy side extension handle or a buying tail at open tomorrow, we can look to tag this VPOC, weekly POC of 25754. So that will be the upper reference. On the downside, you can see how we have got this tail at 25550, and this low of today is right where the series VWAP of October was, 25501. I think 25503 is the low of today. So that is telling us that we are above that VWAP. So the buyers are trying to defend it. But if for any reason we break below this buying tail and negate this buying tail, then we can look for more downside. And what will be the downside reference? We will come to that in a bit. So this is as far as the spot is concerned. Let's now move on to the futures, and we have also got this daily report on futures which goes out along with the report of what has happened in the day. We give out this business areas. So these business areas kind of prepare ourselves to watch what is happening at these references, and if order flow is giving us some signal in conjunction with these levels, we can look to take trades in that direction. So 25554 was our first reference on the downside for the day, and we remained definitely above this, and 25615 was our immediate business area on the upside. So above this we were bullish. We were looking for a tag of 25668, 25729 and 25765. So what have we done today? Let's have a look at the futures chart. So we have the Nifty futures on the left and the order flow on the right. So what was the open type today in Nifty futures? You can see how 6th of November, this was a B-shaped profile where we had an initiative selling tail. So this VWAP was an important reference, and we also had a pullback high at 25765, which was our reference on the upside above the business area. So what did we do today? We opened higher, but the higher open did not get much demand, and we stalled on the upside right at this VWAP. You can see how the A period high is right at the VWAP. So this was telling us that the demand is not able to get above this supply point. And about the downside, you can see where the lows were right where our business area was. 25615 was our reference. So here you are seeing trifecta of greens together. So the inability to break this was telling us that the seller are not doing a good job. At the open, the buyer was not able to take this out. So we were stuck in this range of 25615 to 25685, and that is why it was not a surprise that the second 15-minute bar completely was inside this. And then finally in the B period we made another attempt to probe higher, but we got an RS, and then the when we probe below the VWAP, we are making higher lows. So higher lows, you can see supply was drying up, zeros on the sell side, and when you are making higher lows, you know that the base is shifting and the seller is not present in the market. So that is the reason after the initial balance was done, we were looking for a C side, which we got. And in the C side, we went on to make this high of 25720. So 25729 was our objective, but this C side being C side, it will not give you the exact target. So you need to be happy with how much you get. So what we saw was a probe to 2570 720, and as the seaside does, it gave us a retracement to VWAP. So it is very important to see what happened at VWAP. So we were talking about the 25685 being a supply point. Once this was taken out, that needed to show us change of polarity. And you can see how the seaside dip showed us zeros on the sell side in this dip to VWAP. And you can see how now you're getting an RB bar right at where in the morning you were getting RS. So this was telling us that now the auction Nifty futures has taken support at this 25685 level, and you can look for more upside. So, but again, on the upside, we were not able to do a good job. The buyers were not able to do a good job. In spite of getting a range extension higher, even this IB15 getting triggered, we are only able to make highs of 25747, and we formed multiple highs over there. So this forming of multiple highs, what did it do? It saw the POC shift higher. This was telling us that now the buyers are booking profit because they are not able to continue on the upside. And you can see how in the G period, the order flow showed us that there is completely no demand at these new highs. You have zeros. So what we are seeing on the sell side below the VWAP in the initial balance, and then after the C side, the dip to VWAP, zeros came on the supply side. But here in this bar, in the G period, it was very clear that the demand is not coming in. So after which we got this IS15, and this IS15 easily gave us the target to the downside. Definitely, when you're not able to get demand at the highs, the obvious test for the auction will be to go to VWAP to check for buyers. And in this process, we got this IS15 which got triggered below 25717. Stop loss was 25744, and the first objective was 25690, which it hit. And you can see again when it hit VWAP, same place. The seaside low was right here, the VWAP. We saw zeros on the sell side, and same place we again defended. So this is what the order flow tells us, and it tells us very clearly there is no ambiguity about this. 681 is the low we made after the seaside extension, and if we get back after the IS, it hit the target. And what did it do? It again took support right at that 25681. Same thing, you see supply side zeros. So the VWAP and the IBH are aligned here, and they are showing us an RB bar. So this tells us that the downside is limited. And if you were short based on this IS15, you'll definitely book profit at the first target and trail it to cost, which gets hit. So what we have done into the close, again, the highs failed to show demand. That is the reason we were not able to take out this RS POC of 25740, and into the close we again went back to that support of 25685. So that is what has happened today in Nifty futures. We've already seen the spot chart. I'll just shift this to the 30-minute order flow. And let us check out what are the references for tomorrow. So it's more like a P-shaped profile which we have formed today. We have a very small buying tail, and most of the move came in the initial balance. And after the initial balance, seaside gave us a good move, but then after the seaside we formed similar highs in the E, G and H TPOs. So the POC is also shifted to the top. We had an HVN forming at 25,700 into the close. So that will be our first reference on upside, 25,700, and above 25,700, this 25750 would be the higher reference. On the downside, 25681, the lows which we made twice, would be the level to watch. and then we have this buying tail. So 25645, which we saw in spot, will be a reference in futures also, because you can see this halfback and this buying tail of uh, A period is at 25638, and this halfback is around 25660. So those will be the support for tomorrow. And because it's a P-shape kind of a profile, value would be important. If we stay in this, we can see multiple uh, instances of 80% rule playing out between this value area low and value area high. And I'll come to how we can see if the sellers, option sellers, are in play for tomorrow's settlement, and how we can make that out after we open tomorrow. And if we continue to stay in this value, the sellers will continue to build at whichever strike price they have chosen. And how we need to identify that in live markets tomorrow, and if there is a change, how we need to act, is something I'll show you when I open up the other charts. So for now, the references in futures, 25680 would be the lower reference, and then we have this 25660 level. On the upside, 25700 and 25740 are the uh, levels to watch. Above that, we can look for a test of this selling tail from 6th, and then this anchored VWAP, which is at 25850. So this is as per the futures is concerned. Let's now move on to the tools which we need to follow. And let's start with the gamma exposure chart. So this is the gamma exposure chart, which is come at the close. So I'll come to another chart where you can compare the gamma exposure we had at the open with the latest gamma exposure. So how that helps is it tells us how the positions were at the start of the day and how they have been changing as per the latest auction. So what do we have in the gamma exposure for tomorrow? You can see 25600 is short gamma. Why is it short gamma? The red is well above the green, and you have this peak at 25600, but it is still not a single peak, and that is the reason we have this similar peak over here. Not a similar peak, but a lower peak. But this is again short gamma. This is at 25500. So 25500 and 25600 are short gamma, and we have two peaks for now. So if tomorrow after open, the both of them get into a single peak at 25600, then we can say, and this short gamma continues to go up and the long gamma flattens down, then we could say that the 25600 level is the chosen strike for tomorrow's settlement. So all the action will shift towards that as being the pin level, pin effect. So this is how we will have to read the gamma exposure. A quick look at the two window mode which we have, where, as I mentioned, we can compare the gamma exposure of open with the latest gamma exposure. So you can see on the left is the gamma exposure chart at 9:15 in the morning, and this is the latest one. So we had a 3 peak gamma exposure chart at close on Friday, with 25600 and 25700 being long gamma and 25500 being short gamma. So 3 peak structure means you can get dual moves, two-way moves, and that is what happened. You can change this timeline and see what happened in the A period today at 9:30. You can see how clearly this 3 peak had turned to 2 peak at 9:30 itself, where 25600 retained the long gamma and 25500 was retained the short gamma. So between these 3 peaks, now the fight was between 25600 and 25500, and 25500 became short gamma because we were well above spot in 25500, and that P was attracting uh, writing 25500, and whereas 25600 we were below that in spot, so that was uh, the calls were still getting written in that, and puts were getting bought. So slowly the 25600 gained in prominence, and you can see how we started to form a steeper peak. The value here is 85,000, but then once the afternoon, the morning move was done, you can see how the volumes did not increase. This 90,000 level was the peak, and once we made those poor highs, we again started to come down and form dual peaks. Otherwise, most of the day it seemed as if we will have a single peak at 25,600. But what we have got at the close, and we had long gamma at 25,600. But what we have got at close is a dual peak with short gamma at both 25,600 and 25,500. So we will have to have that in mind and see how this goes. And I'll now move on to the gamma density chart, which is one more important tool which we need to focus on tomorrow. So what is the gamma density showing us? So you can see how just before the close, it looked as if the gamma density is going to close, both the density and the convexity are going to have the same peak, which is at 25650. So it looked as if whenever the density and convexity are pointing to the same level, and these keeps getting steeper. So that tells us that the pin effect may come into play on that expiry. So this was showing us 25,650 at 245. But what happened into the close was, even here you can see how 25,650 is where the convexity and density were kind of peaking. But then what happened into the close was, there is definitely good concentration at 25650, as both convexity and density are showing, but the convexity peak is shifted to 25,600. So 25,600 to 25,650 is what the range looks to be in spot on the upside, and that is what we saw in the spot chart also. Today's value is almost similar to the 25,600 on the downside to 25,650 on the upside. So this is what the gamma density tells us, and apart from the uh, convexity and density, it is also giving us the sigma levels. So on the upside, the 1 sigma level is 25750. So you can see how this is coinciding with that weekly POC, which we discussed in spot chart. So on the upside, if we are able to take off that 25645 spot level and sustain, then we are looking for that tag of the weekly POC of 25754. So this is where the 1 sigma on the upside comes into play. Whereas on the downside, the 1 sigma lower is at 25,500, which is the October series VWAP. So these are the objectives if we are getting a directional move, if we move away from this pin. If not, if we continue to have the density and convexity continue to peak, and the peak gets cheaper and cheaper, then we will look for a close around the 25,650 mark, if the 25,650 is the chosen price. Plus even the gamma exposure will show you that. So this, the 1 sigma is being given, but what is the extreme scenario? The upper tail is at 25,900 and the lower tail is at 25,250. So this is, there is a 4% chance of this to happen. There is the 1 sigma and the level on the upside, and the downside you have a small percentage of that being hit, a good percentage of that being hit in case we get a directional move. But if we continue to move in any direction, then the extreme levels for tomorrow's settlement would be 25,900 on the upside and 25,250 on the downside. So this is what the gamma density is telling us at the close. How do we need to monitor these two charts tomorrow? So the best way to do it is have the chart up and have the 2 window mode. It's very easy to have the 2 window mode. I'll just show it to you so that you go to the menu, you have the gamma exposure, click on Nifty. So you get the gamma exposure chart. You go And here just a second, guys. So we do have a bookmark also, which I'll share. So this is the gamma density and the gamma exposure chart, and I'll share this bookmark even with the chat box so that any of you who wants to make use of this for tomorrow's session can have this open. So you can see how we have the gamma density on the left and the gamma exposure on the right. So what do we need to track tomorrow? We need to see how this shapes up and what these two are doing. If we have this peak at 25,650 and the same thing what we are seeing right now at 25,600 shifts to 25,650, both the gamma exposure is also showing you 25,650 and you have this volume increasing as the day progresses, and both of this yellow and orange are pointing towards the same level. You know that the pin effect is coming into play. So that particular level would be the where the most of the big players are positioned for a close. So gamma density is giving you what the close of the settlement will be. So if both the exposure and the gamma density are showing you a same level and the peak keeps getting steeper and the volumes here keeps getting higher, you know that the pin effect is coming into play. So that will be a day where it will be a short gamma market and you will only be looking at playing the range. You will not be too bullish or bearish because there is less chance of a directional move coming. If not for a single peak or then you can see two-way moves happening, and then you can track which is short gamma and which are the players which would get hurt in case there is a move away from that level. For example, 25,600 is short gamma and more likely 25,600 call is the one which is being written along with the put also. So if in spot we get above the 25,600 mark, we already have discussed how that 25645 is an important level. If we get above that, today we went above that, but we are not able to sustain. So accordingly, if tomorrow we get above that, you can feel this 25,600 call, guys, would try to come out and 25,600 put may try to add in. So this may still remain short gamma, and whether the volumes are increasing or it is getting steeper, we will have to track. In case it gets about 25,650 in spot, then the call guys would have to rush for cover, and then we may get a three peak structure in this gamma exposure. Even the convexity may not match, and then we could look for a 1 sigma target on the upside, which is at 25750. So that is what we'll need to do. We'll need to have this two window mode open, especially on settlement day. This is a very important tool because this tells you how the inventory is positioned, and this is not just small retail inventory or inventory which is not uh, effective, but this is the total inventory. So this will include all the big players. So whenever there is a move happening, this is where you will be able to figure it out. And these are all live charts. They are directly connected to the NSE for the live data. So whenever there is a change, you can see them first over here. So we will have to have this two window mode chart open. Along with this, we have the volume X, which will tell us which of the supply or demand is greater, and accordingly look to take trades in that particular direction. If there is a pin effect, then we could have a subdued expiry and the range would be a narrow one, but then this chart would be the one which will give you the confirmation that you don't need to look for anything big for the settlement day. And the flip side for that would be, once the settlement day is done, then you can look for a move away in the next session, because the coiling is done. The as Shai always mentions, on settlement day it is the tail wagging the dog, neither not the other way around. So once the settlement is out of the way, then it will be the turn of the dog to start wagging its tail again. So let's hope this session is useful to all of you guys, and you make use of these tools uh, on settlement days, because they give you much clarity and take out the noise which is associated more so with on settlements, because you keep getting change of inventory, you keep getting swipes in the both in the puts and the calls, and it is like shooting in the dark. But if you have these tools with you and you're following this chart, you will know what is happening, how the positions are changing, and with what regard you will need to take the setup, whether you need to be short biased in the sense sell options, or you need to look for long options trade. So we will again come out with the hypos for tomorrow, and as well as the business areas for the futures. So you do make sure that you visit the forum section and make note of those levels as well. And then this tools will definitely keep you a step ahead on expiry days, and will make sure that you don't become complacent, or you don't trade just on the basis of hope. You will have much better clarity, and you will know what you are doing, what the structure is showing you, what the tools are showing you, and accordingly you will look to take trades as per that. So that is it for today from my side, guys. I'll sign off for now, and wishing you all a very good settlement tomorrow, and let's catch up soon, yet again for another 5 p.m. session. Thank you for joining in. Signing off for now. Have a great evening, everyone.